Okay, here's a look at the market for Tuesday, August the 17th, 2010. Well, we were looking at some follow-through was what we had expected for today. The market did not sell off at all last night. By the way, these are the market profiles. This is yesterday's and this is today's. And of course, what occurred overnight is right here. So, taking a look at what occurred after the close yesterday, we were expecting some support probably in around the 71 area. As you can see, it did not get down there. I think the low was 74.50. Yeah, so the low was 74.50, and then it started to get bought up. Took out yesterday's high, and then carried on. And the next area that we were looking at for likely resistance was around 85. But you can see overnight it got a little bit above that and then came back down in the overnight and did dip below it also early in the regular trading hours. Our next area of likely resistance was in around 91. And the market really it hit that area and then back didn't really back off at all. The next area up above that was in the 94, just above 94, and this time the market did show some resistance in that area. It got up to 95.50 and then backed off down to 93 in the pause on the way up. Our next area of resistance was 97.75 right here, and the market reached 98.50. So all of these areas were pierced. The last one just barely. Then the market came all the way back down and closed in here. So the kind of day that we had today is really a failure on the part of the bulls. When they had the upper hand for at least the first half of the day, they really gave up the ghost and could not maintain the higher prices. So this is likely to be an indication of follow through lower um, overnight and tomorrow. So if it can take out today's low, which is down around 83 and change, then of course we're looking at 70, 71, and then down to 61. So it does not appear to me, at least at this stage, that this intraday down auction is left us. I believe it's still intact. Of course, we would have to get up above, I think it's 11,004 to really change our minds on that. But for the time being, this kind of failure after the market had rallied so strongly is not a very bullish sign. Here's the profiles from the regular trading hours only. You can see how high it got up here, came all the way back, dropped about 10 points off of the high. Our trades here were when the market just kind of goes one way and then the other. It's tough to get into the trade, into the market, unless you've got a nice setup that can do that. This one did, although it just missed getting filled right here, and then of course went up and had a really nice trade. This one here was up near resistance that I'd mentioned around 98, 97, 75, 98. So there was resistance in here. So kind of reluctant to get long at that area. However, if you did, it was no worse than a break-even trade after 10 minutes. So unfortunately, only our market logic traders were able to exercise a profitable trade off of the break early in the day, i.e. the mechanical trade setup that was triggered didn't actually get us in. So anyway, that's how we're looking at the market for right now. The immediate upside really in around the 93, 94 area as likely resistance, with probably some follow through lower here. So especially if we can get back down and if we can take out today's low, then the selling frenzy could snowball. So something to take into consideration come trading tomorrow. So any questions or comments, just give us an email at info@eminidaytrader.com. We'll get back to you right away. Thanks for taking the time to view the video. We'll see you again tomorrow.